So Jack Chada is asking, I think what's concerning is that with an investor loan, there is a negative cash flow for the first 2 years with the JWB properties. I would love to purchase two right now from you. To date, my mantra has been buying an alligator, aka cash flow negative property, is a no-no and very speculative. Any thoughts?
Yeah, absolutely. That cash flow concern is easy to solve. We just put more money down. So we work with clients all the time, and it might not be a cash flow positive at 20% down, might not be cash flow positive at 25% down. So you put 30% down. If you want to be cash flow positive, that's the easiest problem to solve. Just put 30% down or 35% down, whatnot. So we can certainly build a portfolio to do that and accomplish that for you. I will say though, the idea of putting 30% down or 25% down or whatnot may get you more cash flow in the short run. So you might be cash flow positive at 30% down. But it's an interesting question because if you look over the long haul, over a 10 or a 20-year hold, your internal rate of return is actually lower, even though your cash flow is more positive when you put 30% down or 35% down. So this is the type of discussion that we love to have with clients. We actually can model this out for you and say, okay, well, what's most important right now? Is it important to get a certain amount of cash flow positive for you? Absolutely. Let's recognize that we're giving up some growth by doing that long term. Let's have that open discussion, which is most important. So simple answer is cash flow positive is easy to achieve. We just need to make sure that we build a portfolio around your priorities.
Yeah, and I know that that's what you all do when if somebody has a question like this, they go to chatwithjwb.com, they pick out a time, and that's you dive deep into this, right? But let's say Jag, I'm going to make a couple of assumptions for Jag. Jag is talking about buying two properties, right? Which makes me think that she has enough for sure to put 30% down on one property. And maybe what she's doing is calculating, well, I have enough to like put down two properties at 20 or 25% or something like that. Is there also a scenario where she can put down less on these properties? The properties are cash flow negative themselves in the first 2 years, but there's also other things to invest in that can increase that cash flow and kind of like build a portfolio that way?
Absolutely. So we can work with clients to put a portfolio together based on the best cash flow, based on the best returns and whatnot. And sometimes we come up with excess capital that isn't enough to purchase that next property, but it's something they want to get invested with JWB. And this is where private lending comes into play. So the private lending is for accredited investors, unless the client already has a pre-existing relationship with us. And then we can do private lending. But private lending could be a great stepping stone investment as well. So private lending is in essence where you make a loan to a real estate developer like JWB. That real estate developer is able to pay you interest on that loan. And then, when you are a private lender for JWB, the ability to change that loan that you made for us into your next rental property with JWB is very, very simple and easy. So it creates flexibility for you. So yeah, so absolutely. So even if for whatever reason, there might not be enough, let's run the scenario that we needed to get the cash flow positive, and the way the numbers worked, that meant putting 30% down, and Jag didn't have enough for 30% down for two properties. We might put Jag in one property right now and then do private lending for the remainder, with the expectation then when some combination of events, more capital became available or interest rates came down and that became cash flow positive at 25%, then we could just switch that private loan with Jag into rental property investment, her second rental property investment with JWB.
Yeah, there you go, Jag. So, I mean, there's a couple of options, right? Which I'm sure that chatwithjwb.com, but anybody else listening that's having these kinds of debates, chatwithjwb.com. Oh, and she's using part of a 1031 exchange is what she's saying.
Fantastic. And there's a lot that we can do to set that up correctly. The portfolio of the week that we did a couple of weeks ago now, maybe it was last week, where we went through that 1031 exchange. There's a lot of things that we can work through and make sure that you're getting the full tax savings for yourself. And it's a little bit more complicated when you've got timelines with the 1031 exchange. So that's really where a vertically integrated provider who owns the assets, who can package this up for you, can really be an advantage for you, Jag. So if you're not already on the calls with our team, which it sounds like you are, this would be a great time for us to be able to help you.
Totally.